with Kabani, Marcus Mauritius, Kabani Hotel Group. As you know, we had a privilege to have our first video series that we started in January, and we had a privilege to have John Chang, our Senior Vice President, who put a 5-minute video to inform about 2021, the health of hospitality industry and economy 2021. We have a second speaker which I'm about to present to you in a minute, and I just want to take a few minutes before I present. As you know that we are entering 2021 with a lot of hopes and expectations, as we had one of the worst 2020 in our hotel industry. Few things that are very important to make a note how we are getting into 2021. The very lot of people right now at our industry have one big concern is the debt market has left. So there is no conventional loans. Most lenders are not lending to hospitality. So there are few transactions happening, somewhat seller financing or wraparound mortgage or some curative financing, or a bridge loan that is happening. The second thing is that as we started 2021, we have started with a RevPAR, low RevPAR, ADR is low, occupancy runs average 35-40%, and in the resort area it's over 45-50%. But it's improving, but it's not improving enough to see the net profit for the owners. The one concern that I've seen from management, from the hotel owner, that there is net operating loss, but at the same time they have to put the money, although there is a forbearance, PPP programs going on. So that helps, So within this given up from, we needed a speaker to update us and give us their perspective, give us their insight, how we can run this thing profitably in 2021. The biggest challenge that we have, and biggest, like everybody's looking, the distressed hotel market, what's going to happen there. And to be honest with you, there's a lot of equity funds that funds are available. A lot of people are looking, a lot of owners are looking that we want to buy a steep discount over 40-50% of the value of 2019. So what we have seen that there is no distressed assets market yet in the market, or may not be there as we expected back in 2009, 10, 11, when financial crisis. So I want to introduce executive like our next speaker, who is a chairman and senior director at the Driftwood Capital Management, as well as the Carlos G. Rodriguez. Driftwood name comes here. He is the one who founded the Driftwood company with 30 years plus experience in real estate, lodging and financing, Very high profitable companies in South Florida. They're operating over 70 plus hotels, plus 40 on operating hotels. Very highly recommended group of people who can give a good perspective. They were our last annual forum. They were our keynote speaker. My privilege to present to you our next speaker, Carlos J. Rodriguez.
Hi everyone. It's a true honor to be speaking with all of you today. 2020 was by far a very challenging year. For sure, it was the most challenging year in my entire career. Now, 2021 is going to be also a very interesting year with a lot of challenges. For one, from an operational perspective, it's very difficult, the crystal ball, as to what's going to happen during the next 12 months. I find that my team and I have been constantly reforecasting over and over the same properties in the portfolio, just to try to get a better handle as to what's going to be happening during the year and be able to make the right decisions for each property. So it's going to be challenging. The way we see it today, it's very different from how we saw things just a few months ago. Today, With the vaccine, there's renewed optimism that at some point in time in the near future, we will have, achieved herd immunity, and, the vaccination rate in the country and in the world, will lead us to a point where at some point in time in the future, hotels will start ramping up. But for now, the pandemic, it's hurting us all. This winter is a tough one for us in the hotel industry. And, and we foresee that for the next few months, it'll be very tough. We're all expecting that towards the second half or the end of this year, the hotels will start ramping up, and hopefully in the near future, we will all be once again making money. So the question really is, how do we survive until then? And, one of the things that, again, my team has been doing a lot has been sitting back and every day basically doing new forecasts and trying to keep costs down and trying to, uncover revenue wherever we can. And, how we underwrite now, because we're also buying hotels and we're lending to hotels, how we underwrite now basically is hoping to have or to achieve 2018, 2019 numbers sometime in late 2023, early 2024. And quite frankly, if we are able to break even or close to break even in 2021, we will be very happy. One of the questions that I get asked a lot is, are you seeing a lot of distressed sales in the market today? And that's also changed from a few months ago. If you had asked me this question 2-3 months ago, before the vaccine came out and before the second round of PPP loans, I would have said to you that we were expecting a tsunami of deals to come to the market. And I was actually projecting that. But my expectations have changed, and they have changed drastically in the last 2 months because of the renewed optimism, because of the vaccines, and because of the government programs that have come out to support the industry. Several things are happening in today's market. On one side, there's forbearance from the lenders, and that's allowing owners to kick the can down the road. There's the new PPP loans that is also giving a little bit of breathing room for owners to be able to, again, kick down, the can down the road. And that's basically reducing the amount of hotels being sold under distress. By the same token, based on the experience that we've had in previous recessions, a lot of money was raised for buying distressed properties. So now you have an interesting thing happening. On one end, you have a lot of capital chasing deals, and then on the other end, you have a lot less deals out for sale or distressed deals out for sale. So what you're seeing is lower discounts than what I was expecting a few months ago, and you're seeing a lot less deals and more optimism. So to give you guys an example, I was chasing a deal in New Jersey just recently. Broker guidance had been around $33 million. We underwrote that we would go up to $34 million. And there were several bids that came in the 36, 37 million. And pre-pandemic, this deal would have traded around 43 million. So when you look at it, it's still a healthy discount versus pre-pandemic, but is certainly not the discounts that we were expecting before. In conclusion, what I would say to everybody today is, one, expect less discounts than originally envisioned. You will still see deals, distressed deals coming to market, but I don't believe now that the volume of distressed deals will be as big as I originally envisioned. I think this year is going to be a transition year. The first half is going to be still problematic for all of us, but the second half should be much better and we should start ramping up. I still believe that by the end of 2023, beginning of 2024, we should have We should be back in the numbers that we were achieving in the 2018-2019 timeframe. I do believe that with the PPP loans and with the forbearance that people have been able to negotiate, a lot more hotels will be able to survive, and a lot more or a lot less deals are going to be taking place at distressed prices, and there's certainly going to be a lot of competition from the money that has been raised to be able to, buy these deals. Thank you very much, and have a wonderful day. Stay safe.